Hello traders, and welcome to episode 2 of the rebooted Coach's Playbook. We're incorporating some notes from episode 1, so I went and got a haircut. I started thinking about going back to the gym. That's still in the planning process. But hey, we still have most of our performance coaches here at the tiny table. Dan's filming something else at the moment, so interesting. Hogue and Mick, how's the past week of your life been?
Good.
Fun.
Yeah.
Fun. Oh yeah, it was your birthday this weekend, right?
It was.
Okay, we may come back to that at some point.
Okay,
all
let's
right,
do it.
today it's a week past Halloween, but we're still going to talk about a little bit of a scary topic, which is 5 reasons that most traders don't make money trading futures.
So usually we're going to start with a trader shout out. You got the shout outs?
Definitely. Trader shout outs this week, some big numbers from the traders. Roman Vlasov put up over $2,000 trading the gold this week. We also have Peter Tenek, who put up $1,700 on the same day trading the gold.
You know, that's a good point, Mick. Before we start talking about the reasons why most people don't make money in the futures market, is might as well show some of the people that do, so there is hope. All right, so we have 5 reasons here, and we were thinking about starting out with first, over leverage is a big reason.
You want to start, John? You want me to go?
You're the birthday boy, you go.
It's your birthday,
Okay,
go for
I
it.
appreciate that. Thank you. You two are gentlemen. Well, like we talked about last week, big losses are one of the larger things that hurts traders. Over leverage can lead to big losses. I think in this industry, you know, the large glorified trader, the large trader is glorified, and you know, the more money, the more contracts you put on, the more money you can make. People come to this business sometimes for the reason that, you know, you can almost make unlimited profits.
Sure.
And you know, the larger you trade, the bigger the P&L swings. Over leverage is something that you need to go into gradually. It's nothing that you can jump right into. I've found myself, and I've spoken with many traders who are just a deer in the headlights when they start off trading too large.
Yeah, for sure. You know, coming from the trading floor, we saw a lot of people come and go. One of the worst things that seemed to happen to many of these people were if they, you know, over leveraged, they didn't respect the risk, and if they started off with a big winning trade, they were almost destined to eventually not succeed because they got that big windfall right away, didn't have the respect for the risk in these markets that they should have, and end up leveraging more and more until they can't do it anymore.
That's right, everybody wants to be the guy that trades size, but that's not always the best thing to be doing.
No. Trading within your means, trading smaller than you can is where we see the most success here. It also allows you to stay more nimble too. You can, you know, maybe watch a position. You can hold a position go against you a little bit more without panicking. Emotion's a big part of trading too, and the smaller your size, the less emotion there is.
Yeah, starting as a 1-lot trader in the pit, the first time a broker hit me with a 5-lot, it was abject fear. I had no idea what to do. I couldn't even write down the trade. I was shaking so much.
Yeah, if you ever find yourself shaking while making a trade,
bad idea.
You can't think about that like in a straight and sober sort of way.
No,
Absolutely.
It's not the way you want to live either, day in, day out.
Speaking of ways people don't want to live, number 2 is we have here is people that are in it for the wrong reasons. You see a lot of people get into futures trading for that unlimited profit potential,
Yes.
but they're not in it to do the work, or they're in it because they think it's an easy way to make a buck or things like that, and that couldn't be more wrong.
And absolutely, and you know, there are many reasons to get into the futures industry, and if you're passionate about trading, you may be passionate about the wrong thing. You really need to be passionate about markets. Being passionate about trading, to me, says I'm all about the process. I'm all about getting in, getting out. The platforms are seductive. It's game-like. It seems like it's a lot of fun.
Seductive, I like that.
Yeah,
That's
it is.
seductive.
They can be seductive.
Yeah, they most certainly can be. So coming into this, for the wrong reasons, well, everybody wants to make money at this, but they all want to make big money, and they want to make big money right away. That seductiveness of the trading platform doesn't help that situation. So coming in, being passionate about the process of trading, yeah, it's important, but your true passion has to be understanding markets as well as understanding yourself. We know that the vast majority of being successful in trading comes right between our ears, comes from inside us.
One thing I want to add, a lot of people come into this business thinking that, well, they know they want to make the quick money. That can happen. Usually that's not sustainable. It's really a long process. People underestimate how many days, sessions, years of screen time that you need to get the hang of this. It doesn't happen overnight. And if it does, power to you for getting lucky.
Yeah.
It doesn't last forever.
And if you want to be lucky, just play the lottery, because if you're going to hit it once and be set, it's like that. If you're trading, if you're half-assing the trade and you're doing it over and over again, the stats are just going to bring you down. There's no way you're going to be able to do
lottery,
that.
I think it'd be easier to win and walk away from the lottery than win big in trading and then leave trading.
Do you think some of those big lottery winners, do they keep playing the lottery? Like, is there anyone that won the Powerball that keeps on playing?
You hear some amazing stories about people that have 3 wins under their belt. I don't know if it's the Powerball, but
I hear there's some
large
money
numbers.
laundering involved there. We can do a whole episode on this.
I know nothing about money laundering.
Overnight success sometimes takes years.
Yeah. I want to say hello to Alan O'Neill and George Mitchell for checking in there. Hello to you guys too. So we talked about over leverage. We talked about being in it for the wrong reasons. Our third reason today is the irrationality of large losses. And I can give an example of this, not from personal experience. Let's just say.
Of course not.
Oh, of
If
course
you're
not,
going to
right?
lose $10,000 in a day, I have it on good authority that second $5,000 you lose, it's much easier to lose. Lose it much faster than that first $5,000.
I can say from personal experience, when you are down an uncomfortable amount of money, you're emotional, revenge trading, you say to yourself, what's another $100? What's another $1,000? I'm already getting spanked today, and you care less about that other chunk of money.
Yeah, easy come, easy go, right? Easy come, easy go. I think a lot of what we're kind of discussing here is nobody is really hardwired, or at least nobody that I know is hardwired to be successful in this. And it's very difficult to accept taking losses, to accept we're wrong. So a lot of us are going to default to, well, I'll just wait. Maybe the market will come back and make me whole again, which generally speaking is only going to create bigger losses for us. The other side of that coin, boy, after a few losses, a little winner sure would feel good, but it's not going to recover all of those losses. We have to change that wiring in our brains to think, I need to know where I'm wrong, and I need to be out, and I need to understand when I'm right and maximize those opportunities.
I just feel like that's just good life advice in general too. There's all sort of psychology to go to, and we're hardwired to look for the 0.00001% chance that it's the lion that's in the bush in the Serengeti that's going to come out and eat your face.
Sure.
All right, and that does not bode well for the markets generally. We don't consider downside risk to things in a rational manner. So we have the irrationality of large losses. A fourth thing on our list is that each loss gets easier. This is a little bit on the same topic here.
It is.
Yeah. Well, you start losing a little bit of money, you go on tilt. Easy come, easy go.
Yeah, well, then you kind of fall into that revenge trading after the first loss, or maybe it's a consecutive number of losses where I think everybody has a switch that gets flipped, and once that switch is flipped, the rational thought is out of it, and we're just basically chasing the money, and that just creates more and more losses, and we see it day after day, in futures trading, where when you get that revenge trading, it's usually going to end up bad.
Yeah. Has a revenge trade ever worked out for either of you?
Unfortunately, it has, which kind of instills in the brain the next time you're in that situation. Well, it worked last time. You get this idea. Hey, maybe this is the time I'm going to get away with it.
Yeah, the one time it works, it sets you up for failure on the next 9 times.
Absolutely.
Yeah, I would put it at about that 10% range it works, and the 9 are all real bad.
Yes.
Okay, cool. Well, this brings us to our fifth point here, and I think this one we can really get into depth on, is amateurs trading in a professional world. People are in this at varying degrees of commitment, at varying degrees of time that they're putting into it, and it really is one of the most sophisticated markets in the world. I would say, well, for a bond guy, so I'd say bonds and futures. What do you guys think about that? How can you overcome that?
I would say that, this is a very competitive industry. There's a lot of smart people out there that are trying to take your money. They may or may not be more passionate than you, but the more passion you have, the more of a chance you have to take money out of other people's pockets. You really do need that. You got to do your homework. You got to plan ahead.
And we are basically amateurs in a professional world. The professionals are very good at what they do. They treat it like a business. They treat it like a practice. Like if they were a doctor or a lawyer, they're constantly continuing to improve their education, improve their abilities to understand how markets work. A lot of traders come into this not understanding that they don't even know what they don't know, and that can be a dangerous thing. So you really want to be reasonable in your expectations and your ability to enter into hey, there's my ride.
Oh yeah. I don't know if you guys can hear it. The ambulance is going by.
Right. So
they left without you, Hogue.
Wait. You really have to give yourself the time to absorb the knowledge to be competitive in this environment.
100%. I think the professionals out there, they have things framed out. They have a plan for everything. The newbies, the amateurs, they kind of step into the markets like I did when I first started and kind of wing it and see what happens. You really need to have things planned out, though. One thing that separates the amateurs from the professionals is emotion too. You see a lot of amateur traders out of emotion. Oh gosh, gold, it's going up, I'm gonna buy the new highs, only to watch it pull back. They have to puke their position, cover exactly where they probably should have put it on, buying an uptrending market in a pullback. And the professionals, they've got the patience, they're waiting. They don't want to chase the carrot as we're making new highs. They'll wait for the new highs to be made, get a pullback, a low risk entry, put it on, and then, not take any heat on that trade.
Well, sure thing. I'd like to give a big old howdy to Jay Essen. Hello to you too, and good day. To me, this topic reminds me of why you have to trade what is happening as opposed to what should be happening.
Or what you think should
be happening. That is the greatest sin of all. Like that could be carved into a tablet and found by
Yes.
Paul Tudor Jones on the mountain.
And it's pretty easy for if you already have an opinion, for you to fight for that opinion, even though things in the marketplace may be screaming at you, hey, that's wrong. It's very easy for us to discount those things and to stick to what we think. So, the trading what you see is certainly going to be helpful. And we were talking about the professionals. We don't mean to say that professionals always make money at this, but they make money over time. A lot of that is that risk management.
And what you see is generally real too.
Yeah.
And there's a lot of knowledge out there that you just aren't privy to as a retail trader. And that's why you have to do what is happening.
Yeah.
Okay, well, just to recap before we go to our little closing here.
Okay.
So our 5 reasons were 1, over leverage. 2, in it for the wrong reasons. 3, Dan Hodgman. Come on in.
Hey.
Just to make an appearance. He's not going to be mic'd up, but Dan just walked into the studio.
Say hello, Dan.
Sorry I missed it, everybody. How did things go?
Good.
They're going well so far. We're just breaking it down, one last time. The 5
Just
reasons.
wrapping it up.
Over leverage,
Perfect.
in it for the wrong reasons. The irrationality of losses. Each loss gets easier, and we are all amateurs in a professional world.
Very
I
well.
like kind of like that James Brown song. I don't know if we'll have the quote fly in because.
We got it right here.
Oh, we do?
Yeah.
Did John get it?
Here it comes.
Hang on.
Right there
Here
to
it
the
comes.
left.
All right.
Nope, other one.
And here we go.
This is riveting television.
Yes.
Oh, we have
wrong-
last week's
wrong
quote. I have the quote here if we'd like to read it instead.
Pull that out. Push the other one in.
Danny needs to say something. Give it to him.
Where is it? It's not on
You
here.
didn't put it in.
No. You said everything was set up.
Guys,
Why
this is
didn't you
video
call me?
editing
Are we
from Top
live
Step
right
Trader.
now?
Yes,
Yes,
yeah.
absolutely.
All right, so I'll hit the quote.
Here you go.
Let me get the piece of paper. All right, so the quote I picked today is success consists of going from failure to failure without loss of enthusiasm. And that's said by Winston Churchill.
All right.
As you guys should hear.
Winston has
Success
a lot of good
consists
quotes.
of going from failure to failure without loss of enthusiasm, from Winston Churchill himself. So if it's from Winston, that's good advice.
Yes, just like we said, overnight success can take years.
Yeah, and I think with that, we'll sign off if we haven't scared you away from futures with this yet. Remember, it's also Trader Appreciation Week here. I believe all the trading combines are 30% off to celebrate our funded traders who have been
Outstanding.
doing it. That's a good thing. And, you want to give us one of your patented sign-offs?
Do I have a patented sign-off?
I think it's
Stay
just 2
humble.
words or 4 words.
Trade well.
All right, we'll see you guys next week.